that things will happen. And if you then look at per capita income growth, even if I use what I would call lower than what we expected, near double-digit growth, I think we will see in the 1821 period, that is where we will set our goal for India at 75. India to be GDP at a GDP per capita or per capita income of growing from around $2,500 to $4,000 at that point in time. So clearly growth will be sustained, growth will be steady, and we need to see what we can do around that growth in terms of economy. Economy is on a path which has been opened up. There will be temporary hiccups, but we will continue to grow and continue to do well. Very quickly, the power of money, the power of, I would say, this economic growth that is accelerating, the numbers that I put in. I'm translating this into the deposit growth in the system. And if you look at just between 2000 and 2012, you look at deposit line from 8.5 trillion, you are now at 62 trillion. And that's basically almost six-fold growth in 12 years. Or actually it is a five-fold growth every decade. That's what we have been seeing. And if you look at advances are growing at 7x multiple every 10 years. So there is investment happening, and this step change that has happened between 2000 and 2010 is what has driven our economy. And this is irreversible. That is why I have belief in the economy that economy will continue to grow at a rapid pace, because this change is irreversible. And this is not a short-term trend we have seen. We have now seen this over 40 years. A 5x trend every 10 years. So we are throwing up more surpluses. All these surpluses, by and large, go into the developmental effort, the development of the economy. And that's what will push India to 75 and beyond in the coming years. Technology so that's the one fundamental principle, that we are not going to fall short of money. That's my belief. Then we could have fallen short on the next pillar, which I believe is the only other pillar we require. The third pillar is entrepreneurship. I don't think we have a shortage of that. Is technology for the masses. Can we leverage technology for the masses? I must share that we tried to push technology at ICICI Bank 6-7 years back to the masses. We actually drew out a map to reach out and to mass India through technology. We failed. We failed because at that point of time technology had not evolved in terms of robustness, in terms of cost being so low that we could take it to the mass and so on. So we took too early a call. But today, I think we are right in time. Today, what Aadhaar has done is right in time. So all these, keep giving you a lot of hope that things will happen. I've just put this slide, what we have not done. So this is a not done slide. So you flip the not done side, it is a to be done slide. All these numbers can increase. That's the opportunity. And that's also the challenge of taking banking to 700 million people in 600,000 villages in 600 districts. I look at it not as a challenge, but I look at it as an opportunity, because today technology is in place and you have entrepreneurship in place. Money is already there, as I have put it in context. So smart cards, POS machines, low-cost branches, low-cost ATMs, mobile phones. To me, all these signal one thing, what I call the unwired world. The unwired world is on us. And I gave you that number of people who have jumped on to the 3G bandwagon, 8x growth, and I said going to 200 million hopefully in the next 2 years. A completely unwired world. And we, as business, whether in the financial services business or whatever business you are in, have to think of the unwired world. And I keep telling my organization, ICICI Bank, that an unwired world doesn't mean take away the wiring and just put a GPS in. No. Unwiring is unwiring your mind. Your mind has to be unwired to really operate in the unwired world, and that's what will make the difference as you go along. Because all these things are possible today, and you could actually drive what you want to do using technologies available today. Smart cards I talked about, branch in a box, basically this is an unwired device. It happens to be an unwired device, but can do everything that a physical branch can do. And the extent of unwiring, I'll give you an example. Today, in ICICI Bank, you can open a remote account. That is, a person can go out to a village or a rural area and open an account straight through. No other intervention. In the branch, it still takes 4 hours, and there are interventions. So we have to still think through how we can push it. So basically the branch in a box is a reality, is at a cost line which is affordable, and I think that's what's happening. The other key, I would say, disruptor, without which nothing would have been possible, is the unique identity number. I think we see the progress on it. We see debate on it, and this is a democracy, so we cannot stop debate. Even today there is a debate whether what is Aadhaar and what is the national population registry number. I'm sure they will find a solution, but to me, Aadhaar is a big jump in terms of what we could do to actually drive inclusion to all. As said, 5 years back we failed, today we can. Subsidy transfer, again today I see the Honorable FM making a statement that with direct transfers of subsidy, he expects 60% of subsidy wastages and leakages to be plugged. So basically he's saying today's system, 60% inefficiency cost, whatever be the number. I think you are looking at things which could be done much more easily, much more in time, and much more hopefully without too much of leakage, system leakage. Similarly, payment ecosystem and credit. You build a history, and you teach savings, and you then are comfortable in lending. So saving and lending are flip sides. One is required, saving is required to get you into the Lending Act, and we hope that this will happen when we reach that 700 million mass, which today is unbanked as we go along. Again, I won't go into these. I mentioned branches, ATMs, and online products. Everything on a technology platform which is unwired, which is connected at low cost, I think is what we will see as we go along. Analytics, servicing the customer to his lifetime. So technology is basically transforming the lives of every single customer who has a need to deal with money. And if you then extend it to any business, ultimately everybody is dealing with money. And we believe that in the next 3 years, we're looking at an India where we will be actually leaders in the world in terms of the way we deal with our customer, whether the customer is in urban India or rural India, in terms of the product suite that he will get, in terms of what he's entitled to from the government, and in terms of what all this will do to again push up, I would say, the ability to grow within the country in a personal context, and by contributing to the economic growth to grow the country. So again, a big bet on what has happened in the financial services side, the scale change in terms of ability to generate cash in terms of your economic activity, and the scale change that has happened, or the order change that has happened in terms of technology and embracing technology, I think provides the foundation for the future for this country. So I will stop at this in the context of what I had to say, with this thought that this then, I think, provides us the takeoff point for India at 75, and that's what makes me believe that one part of what is required to do. There's a whole lot of other pieces in CK's equation. I think one lot is falling in place, and the challenge is for us to make sure that in the social context, in the education context, health context, those pieces fall in place so that we see this as a reality. I'm going to stop at this point and take my seat and see what the next 20 minutes have for us.
Mr. Kamath, for the presentation. Thank you, ladies and gentlemen, for joining us on this session of Nurturing the Power of Finance and Technology. A quick announcement: I'll be opening the floor for the audience several times during the discussion. I would request all of you to stand up so that the cameras can locate you, and then introduce yourself and ask your question. All right, Mr. Kamath, let me start by asking you, financial inclusion is national priority. How can technology be leveraged so that we make sure that we achieve some of the aggressive targets that have been set up by the RBI and the Ministry of Finance?
I think today technology is in sync with, I would say, aspirations of regulators and aspirations of the government. 5 years back, technology was not in sync. If these thoughts were expressed 5 years back, we have tried to do it 5 years back. Cost of technology was too high, technology was not appropriate, hardware devices were too costly, so it would not have worked. But today, the whole thing has changed to make technology possible. I think Aadhaar becomes clearly an underlying enabler. And thereafter, the push that has been given by the Reserve Bank in requiring banks to do things, the cost of technology dropping, the reach of access to technology in terms of broadband and or hardware costs today as they are, makes the whole dream possible. So 700 million people, 600,000 villages, 600 districts looks now very doable.
All right, sir. From where we are now today, do you think technology will be the biggest lever, not merely the regulatory reforms, easing out regulatory reforms or mere administrative fiats?
I would say that all need to be in sync. Technology alone will probably not get us anywhere without there being regulatory thought which keeps pace with technology. But having said that and seeing the last 5 years, I have no doubts. As of now, the regulator is ahead of the curve. Ahead of the curve, mark my words. The regulator is ahead of the curve in terms of what's required in a technology context to take inclusiveness in the banking context to the mass in the country. So they are well in time.
All right, sir. Why do you think that technology will be the disruptive change in banking?
Because it allows you to serve the remotest customer, the poorest customer, at a price point which is affordable to that customer, at a price point which makes it possible for you to provide that service. Otherwise, you will run losses, you will need to think of subsidies, and then it becomes unworkable.
All right, we have a question from Mr. Arun Nathan, CEO of Sybage. You're a young entrepreneur, sir. What do you think, how does technology will play a role in changing India? If you could please stand up a microphone.
Firstly, Mr. Kamath, it was an absolute pleasure listening to you. I think this 15 minutes of express presentation, somebody has to learn how to set the country's GDP information to everyone in such a short time, as well as how to make express tea, Now, I come from a technology background, so it's more imbibed in my DNA. Something that we could not have done 15 years back, the company that I run, Sybage, exists only because of technology. So my 2-3 cents, which is from a different perspective, 15 years back, things were not possible this way because it was a more unfair world. At that time, lucky ones succeeded, and in an unfair world, you may have an existing business where might be running by a person with a little low IQ. It's an inefficient business, but there's no competition, or people with high IQ are taking unfair advantage. Technology changed that. It kind of kicked the hope factor out of the equation. So in the world we live in the IT services world, it depends on how well you understand technology to get a competitive advantage over your peers, and that has gradually resulted in more and more efficient companies coming up. And that is happening in every industry, people who understand the power of technology. And in an efficient world, obviously there's a higher productivity, and there's a higher productivity means more there is to go around. So I cannot relate more to your thought process to India at 75, that how technology in future will be changing the way our country progresses.
Thank you.
Thank you.
Okay, Mr. Kamath, India faces a paradoxical situation today. Financial resources are available, but still we haven't realized its full potential. And what needs to be done is that key enablers need to be in place, and improving access to finance is one such key enabler. How do you propose we can do that?
The access to finance has got a flip side. It's not only access to finance, it has to be access to affordable finance. If you provide access to finance and it's not affordable, it's not going to work.
True.
For example, if you were to provide a home loan all across India to everybody, but it's going to cost you 18%, it's not going to work. Even at 12%, it will be a challenge. But you make home loans affordable at 8%, I think it becomes another economic driver which will again push us back towards double-digit growth. The point is, how do you get interest rates to a level where it becomes affordable to everyone? That's one part of it. Simultaneously, you have to work on access. Access, again, several things into it. You need to make sure that there's right to property. You need to make sure that that property then be put up as pledge for a loan that person is taking. So there are several steps that need to be taken, but to start with, if we can get lending or borrowing costs to be affordable, you are plucking a whole lot of low-hanging fruit, and you can then go up to almost double-digit growth just riding on this. Thereafter, or in parallel, you can do the harder task. So in India, that's the good that I see. The whole lot of low-hanging fruit. You organize ourselves, we can pluck that.
All right, mandate of policy has played a critical role in getting banks to reach the remote regions, but in majority of the cases, it hasn't been a profitable source of, profitable venture for the banks. Do you think with advancement of technology today, does it make business sense for banks to reach out to the last mile customers?
See, I think it will be stupid on any part of any banker if you don't reach out to 700 million people who are the next, who would provide the next growth momentum. See, if you look at the numbers that I shared earlier, the growth from $250 per capita to $500 per capita happened over 25 years. Thereafter, there is a jump. Now, when you talk of India, there is not one India, there are several Indias. There is still an India which is at maybe $500 per capita. In the next 5 years, you can expect that India to grow to $1,000 plus $1,200, $1,300 per capita. So you got a huge opportunity there, and that's the addressable set we are talking of. So you need to figure out a way how to serve that set. And as I said, at ICICI Bank, we tried to serve that set 5-6 years back. We were too early. Indeed, we are now geared to serve that set. And in the meantime, all other banks are also geared to serve that set. And I think it's good that everybody is out there.
And today, with advancement of technology, can you throw some light on how easy it has become to reach out to the last mile customer?
Yeah, I think several things have fallen in place. The first is Aadhaar, as I said. So you have the customer as an identity. The second is clearly the low cost of technology, both hardware and software, and the availability and the abundance of technology that is useful in this sort of a thing. All these have come together. Side by side, the service provider, whether it's the technology company or the banking service provider, have become smarter in using technology. And of course, the last part of the equation, our lay customer also has become smarter and adept in using technology. So technology is now falling into place, and it should be fairly easy for us to leverage going forward.
You spoke about the Aadhaar project. The government's unique identification program is a path-breaking technology effort that has been undertaken, and it's not only helping creating an identity, but is also helping achieve financial inclusion at low cost. Can you throw some light on that?
Yeah, I guess that Aadhaar probably will be, when you look back in hindsight a few years from now, will be seen as probably one of the most path-breaking projects that anybody anywhere in the world has ever undertaken. We talk of, there are several other things that I'm sure Aadhaar will enable, including raising your own self-consciousness and giving you an identity within the country. But in the context of subsidies, inclusive growth, I think it is a path breaker. That in the context of financial inclusion, it is a path breaker, because you can now provide a service to this customer which just a few years back was not possible. The enablers were not there, the identity certainty was not there. All these things are now falling in place. To me, it's a huge game changer.
All right, also continuing this topic, there's been a huge amount of money that has been spent on rolling out the Aadhaar project, which is not complete yet. If we do the cost-benefit analysis, do you think it will serve the purpose? Is the banking system ready to grab this opportunity with both hands?
Yeah, I do not have precise numbers on how much has been spent on Aadhaar, but I don't think it is in the context of the challenge that it has the delivery challenge it has got. I don't think it's a number which anybody is talking of in a negative context. In terms of the banking side, if we were to try to do what we are trying to do today 5 years back, it would have broken our backs. But in today's context, with, as I said, the costs of all technologies we use also having dropped, I think it becomes very much worthwhile and very much possible to deliver service to the common man in whichever remote part of India he or she is in.
I would like to ask the audience any ventures that are working in the financial inclusion space and would like to ask any questions on the Aadhaar project. None? All right, continuing our discussion. Sir, the Raghuram Rajan Committee on Financial Sector Reform in 2008 proposed that NBFC and MFIs should become banking correspondents for savings, and in turn this whole thing should be based on a mobile banking platform. Now today in India, like your presentation said, we have over 930 million subscribers, over 300 million are in rural areas itself. How critical is it to use the mobile banking platform for financial inclusion?
Yeah, I would, I was a member of that committee. I would entirely agree that technology has to be used, the mobile platforms have to be used for doing that. I think on the first part of it, who are the vendors who will do this? I think we need to be a little careful because of the challenges that we have had with some of our cooperative banks and the regulatory challenges that come forth purely from that point of view. So we need to make sure that a regulator is ready to supervise this with the rules which are tightly in place a priori, so that you don't get into challenges as you go along. But as a concept, the committee was basically saying that you need to be sure to make sure that there are adequate number of agencies which will roll out things and using technology. Technology part is fallen in place. But what has also happened in the last 5 years is that the regulator has allowed you to use existing banks, for example, to use what we call correspondence, bank correspondence in remote areas. And these now are supervised because the banks are supervised. So it serves the purposes of having allowed several other entities who would have otherwise need to be supervised. So through the banks itself now this is happening. Technology is fully in place. So I would think a large part of what the committee said is now getting traction.
And so do we have lessons to learn from African countries?
Honestly, no.
No?
Honestly, no. I think there is a lot of talk. What is done in those countries on handheld device and things like that, I would say is that in our context, on a 1 to 10 scale at the 1-2 level, we are doing several things at the 9-10 level. So let's concentrate on what we are doing. But we will keep our eyes and ears open for what's happening elsewhere. And if there's a good idea implementable, we'll implement it. But not necessarily what has been rolled out in African countries.
All right, you said at an industry conference, and I quote, "I believe direct cash transfer will change the budgetary process in the country. It will change our deficit process and will make a huge lot of good as money goes into the hands of people." End quote. How will direct cash transfer help reduce budgetary deficit?
Yeah, I am happy that this question is asked, and I was also happy this morning to see the Honorable Finance Minister has put a number of 60% of wastage efficiency improvement, wastage will be eliminated and so on. It's very simple. I would think that you are eliminating a layer which is today prevalent in India and which we all know is where the leakage happens. That's the middle layer, which is the middle. Now, I have nothing against that layer. That layer was there because it provided systemic pass-through earlier. But if you can pass through straight to the beneficiary, the entire layer and all the ills that could come with that layer are eliminated. So I would think a simple and secondly also probably allows you to weed out beneficiary accounts which ought not to be there. It also allows you, leave aside all these things. It also allows you to direct subsidies to people who really need it. Now, I would dare say that a large number of people in this room do not need subsidy on the cooking gas that you get at home. You can debate it with me, but I would start with that principle. But the question is, let me rephrase it. There are people who are more needy than us here who need that subsidy. So you give that subsidy directly to those people, whereas you eliminate it for the people who are sitting here. Now that itself will result in savings. Now that's not possible today, but the moment you have linked Aadhaar and the income level of a person, and that's linked to his bank account, you could make the subsidy transfer direct. Second is, you may not even talk about it as you run a much more efficient system, because the subsidy transfer then need not be the producer of that service, say the oil company, giving a cut to selling the product at a cheaper price. The oil company can still sell it at market price. The moment the sale has been made to somebody who is entitled to the benefit, the government credits that person's account online from a government account. So it's an instantaneous transfer. Today, like the moment you have gone and withdrawn cash from an ATM, you get an SMS message. Similarly, you get an SMS message. You bought a gas cylinder, you paid 900 rupees. Here is your 600 rupees subsidy, credit it to your bank account. Same 1 second transaction loop is completed. Today it is possible to do it, because all of us sitting here are getting alerts for every transaction that we do on our banking thing. If we have asked the bank to give us that alert. So the whole way in which we will treat subsidy is going to be different. I think the sum total of that is the number probably which the finance minister had in mind.
All right. At the risk of sounding pessimistic, or should I call impatient, it seems like we have everything in place, from vision statements, policy papers, technology, manpower, we have mobile money going on. But we are still miles away from the tipping point where we can see things happening quickly. When will we see tangible results?
See, sometimes, quickly is a dangerous word. See, because till 2 years back, things appeared to be growing at 9%. Or suddenly, including me, I said, we are now clearly on to the 10% growth, because I have this habit of counting counted growth and uncounted growth. So you have growth which is counted, I would say is 9%, and there is an uncounted, unaccounted, whatever growth which is also happening. But the challenge has been, what has been the challenge? People say there has been judicial activism, there has been a deeper look into certain things. If you step back, pause and look at it, all these are required to make sure that growth remains what I would call wholesome, and growth going forward 5, 10, 15 years on a proper foundation. So you can also see the interventions that have been done by the judiciary or by certain ministries as putting things on a proper foundation and making sure things that are not or should not be there are not there. Now, that might have delayed you by 1.5 years, but if that is the cost you are going to pay for making sure that things are on a platform, I am happy to pay. But if there is inaction for 3, 4, 5 years, then you are putting back the growth to a level where you will probably then have to reinvent yourself to grow. So I would at this point in time say, let's look at what's the outcome of these things, tighter administration, better laid out rules, and then we should look at it. And looking at the urgency with the government is addressing several things at this point in time, I would tend to be optimistic rather than pessimistic that things will be done, and we should be back on sometime during this year to a track where we will say, oh, most of the enablers are in place, there is clarity, and we can go ahead.
All right, anyone up for a debate? Is quickly a dangerous word? Anybody? Yes, sir. Okay, just a second, we'll get a microphone. You have one? Yeah.
Yeah, my name is Sudhir Mehta. If I can just change tracks for a bit, I had a
Sure.
different question for you. A large percentage increase in the wealth in urban and semi-urban and rural India has really been the increase in real estate prices. And if you look at the percentage of wealth of an average individual, whether it's in urban India or in rural India, it's coming out of what has been this inordinate increase. And by all measures, our cost of real estate, especially in the big cities, is out of proportion to the per capita income of the country. Now, is this a bubble, A? And number two, is this a real increase in wealth? Because it's all notional. What happens if we have something like a Spain and the value goes down by 50%? Then what happens?
It's better you are not in the real estate business.
Fortunately. or
I'm going to
unfortunately.
talk to the real estate people in the afternoon, immediately after this meeting. So, I will have a better understanding when I talk to them. But on a serious note, no, it is a large part of the wealth creation that you are seeing. The numbers that I talked about are not coming from necessarily from real estate. We can discuss real estate in a moment separately. So these numbers are coming from hard work and hard things that are done by people, and what I would call effort put in, and the outcome of that effort, what we in economic terms may call value added, is what is coming out. Yeah, in notional value of your wealth, if you look at your home as appreciated in value, or your landholding as appreciated in value, yes, that could be artificial at this point in time to some degree. To what degree we can debate. Linked question was, are we into a situation like Spain or some of these other economies? The answer to that is clearly no. The reason is very simple. Even today, I would think almost the entire stock of, let us take homes in the country, is first user. Yeah, we all know that people have a second home, third home, people have bought it for speculation and so on. But I'm talking of, if you look at across, a large part is first ownership. And there, the dwelling is for you to stay. So you're going to stay. And we still see that when you have borrowed for these, for this purpose, you have in your mind, your obligation always is, you feel, to pay that loan off first before you get into more indebtedness. That's changing to some extent, but there are some checks and balances which have come in, which is pushing you back to, let me own the home first and then let me see what is it that I need to do in terms of other assets. So as long as that remains so, I think we are okay. And would there be a bubble? Would there be a correction? I think in an economy that's growing at our rate, where inflation has been 7-8%, property prices also will tend to grow at a pace faster than inflation. But in India, they have been even faster than what you would have expected. So to that extent, there could be a correction, but it should not be a correction. I don't think it will be a correction. It will take out large or hurt the large part of the mass, because they have borrowed. The lenders have seen that these people can pay whatever. Now, if the same statement I were to make 5 years back, then there would have been a question mark, because the lender did not have ways to figure out what other indebtedness this retail individual borrower had. But today with the credit bureaus, the lender is clearly looking at a file where he says if Mr. X wants to borrow for a home, when you throw up his bank and other details, whatever loans he has with whichever other bank also get thrown up. So the bank is able to better make a judgment whether to give a loan or not. And this capability is increasing day by day. So the lending is getting tighter. So I don't think there will be a systemic disruption. Yes, correction in property prices will happen depending on economic movement. No risk that I see.
All right. Yes, ma'am, please. Can you just pass the microphone? Please introduce.
Hi, my name is Lakshmi Praturi. I have a completely non-financial question for you. You're very well known in the industry for your succession planning. As most of the Indian industries are moving from a non-founder-led stage and non-family-led stage, what sort of things do you think companies should do in terms of succession planning?
Yeah. The way I looked at succession planning, primarily my experience is with ICICI Bank, thought around that, is not a last minute process. Succession planning is a carefully thought out process which you create a pool of talent very early, and if you have a large professional base or even a family base, that gives you that much more time to look at that base, and then you allow that base to grow through as they grow in seniority. And we find that even when you are five years into succession and you got a slate of say 6 names or 8 names, how those names will pan out in the next 5 years, I have found many surprises happen. Because as each level of challenge increases, you find people who you thought had certain qualities, you find now they have also some weaknesses. And you then need to take a holistic view whether those strengths outweigh the weaknesses and whether those strengths and weaknesses are something that the business can live in today. So I would guess the cone and the shape of the cone determines how you go up the cone, and your own strengths and weaknesses and the company's needs at a point of time, I think, determine what is. For example, I'll just pick 2 things which in the last 10 years have become important. With the rapid change in technology and what is happening, I would say that the need for a leader to deal with ambiguity. By ambiguity, I mean uncertainty in terms of various parameters that you're dealing with. And the leader has to be comfortable in this context, I think, comes to be paramount. His ability then to drive this to his peers, drive this to subordinates becomes paramount. So, and also in times of volatility, in times of, I would say, the ability of a leader to stand up to shock, distinct from ambiguity, becomes important. Various types of shocks. It could be a political shock, policy change shock in terms of the change in business environment, and so on and so forth. So how equanimous are you? If you go back to most HR texts, you do not find this as a quality which is really put into the matrix. But I would think in a growing country like India, at this pace that we are growing, this becomes an important consideration that you should have. So you need to look at all these as the cone gets narrower at the top. And in the last 3-4 years, these qualities are the ones that you need to watch, maybe test in your own way, and see how a person shapes up to this. And if you can use some tools, some outside help to actually educate you, the team which is taking the decision, whether it's typically it's the nomination committee or the board, you can have some way in which you can be educated, you are then able to choose better. I would think that this probably is an emerging best practice. In the West, it has become more or less acknowledged best practice, though it is not perfected. And I think in India, we are just at the start of this practice. But I'm happy to see that there are several what I'd call family entrepreneur-led companies which are following almost the same policy in making sure they get right leadership at top.
Any more questions? Okay, we have lots.
Lady there.
Yeah. Do you have a microphone?
Hi, my name is Rajshri and I belong to Eat in India. My question is, sir, in the past 4 to 5 years, the world economy is going through a huge challenge triggered by the mortgage-based crisis in the US. And obviously the banking world has felt the jitters of that. Compared to that, the Indian banking has been relatively stable. So what, in your opinion, has Indian banking done differently that has helped us so far, and what should we continue to do?
I think this question is very simple because the answer is straight, maybe 2 lines. One is that our regulator was ahead of the curve. Our regulator was ahead of the curve in the context of most of even the solutions that global regulators are talking of today were in place. Compensation is number 1 issue that global regulators are talking of. In India, compensation of banking senior teams were always controlled by the regulator. So you did not have the greed issues that the West talked about. Second, the Indian regulator always worked on what I'd call very tight capital adequacy ratios. So where capital adequacy and leverage became a challenge for global banks, there is no longer a challenge now. See, global banks are still negotiating on these 2 issues, compensation and capital adequacy, and seeking time till 2018, 2019. Yesterday, I think you saw ICICI Bank declare its results. ICICI Bank is running 20% capital adequacy. Global banks are fighting for time till 2019 to reach 9% or so capital adequacy. So the regulator was ahead of the curve. I think as simple as that. Second line was really, the regulator also did not allow you to get into the sort of risky businesses the West got into. So we were in a way saved by the regulator in this context.
Yes,
You had a question next.
My name is Kedar. I'm from Sybase Software. I have one question. Again, not directly related to the banking sphere, but regarding the corporate savings, which in a form are going to be now taxed by way of the CSR initiative, which is proposed in the new Companies Amendment Bill. So when we talk about inclusiveness of that particular spend, which is likely to impact a lot of people, especially the underprivileged, how do you basically, my first question is, do you really recommend that? And second is, if you see it happening, what are your views or vision as far as that spend is concerned?
Yeah, I would look at it very simply as a positive, because the government has 2 options. They could have taxed you higher and said, this is what I will pass through as subsidy in our own wisdom for common good, because we believe that that is required. And I don't think we can argue that there is a vast divide and we need to bring up a whole lot of people. What the government instead is saying is, you take 2% out of your profit and you do what is common good for the large mass. I think that is a better method. The flip side is the 2 related questions you asked. It takes away from the profit of the corporate, and does it do any good? It takes away from the profit of the corporate, but it also is doing good, a public good, and I believe a public good always creates an opportunity for the mass of corporates. Now, what good has been created may not exactly impact the company that you or I are working for, but it impacts the mass of corporates. If it impacts the mass of corporates, it comes back to the economy. So I think this cycles back. Only difference is the government could have taxed it and spent the money. The government now saying, I'm not going to tax it and spend the money. You do what is good. I think that's a good idea. And again, sort of, I would say, pioneering idea across the world, wherever across the world.
All right, coming back to the, I'll just come back again, yeah. So coming back to financial inclusion, to strengthen the momentum of progress in financial inclusion, what are some of the initiatives that are required? Some of the major initiatives you think are required?
I think there are 3 or 4 initiatives, or maybe 5 initiatives required, of which several have been taken. The first was to make sure that, from a banking side, the government side, you knew your equivalent of the customer. Banking side customer, the the government side, the resident who needs to get the benefit. That part is falling in place. That part has fallen in place. Then the next part is really your ability to conjure a service. Earlier on it was conjuring a service which makes that possible, whether it's the banking platforms, technology platforms and so on. Today they are not in the conjuring state, they are there in place. So that part has fallen in place. The third was then to say, if it is products, including subsidy products, direct crediting of subsidies, or other financial products, savings products, borrowing products, insurance products, making sure that those products get to the customer, for which you need a type of branch which may be wireless, but needs to be regulated, needs to be approved and implemented. That has fallen in place. 5 years back that did not happen. So the KYC bit has fallen in place, the technology bit has fallen in place, the training of the platforms and the regulation that was required to make it happen have fallen in place. The last bit there, I think, and the key bit was a large part of this will be direct subsidy transfers. Identification of what are those subsidies, identification of the beneficiaries, quantum, making sure that all these are interconnected. I think that's work in process. I believe that given the work that has been done, this work in process will fall in place very quickly.
Sure. So, time doesn't permit us to take a lot of questions, but yeah, a few ones. Yeah.
Hi, my name is Viraj Kalyani. I wanted to know, do you think government regulation has discouraged or encouraged the formation of startups in the banking sector, and especially to create innovations for inclusive
Are you talking about banking sector or
Yes, banking sector.
startups in the banking sector?
Yeah.
Anna.
I would think that in the financial services business, it's a good question. In the financial services business, there are actually no barriers. The government doesn't come in way of anybody doing anything except starting a bank and an insurance company. Everything else is unregulated. So you could get in and start if you have the requisite capital and have 100% holding there, or bring in a foreign partner. You have freedom, degrees of freedom which I find the West doesn't provide you. But this is a tough business, so that's why probably you see people not jumping in, and particularly young jumping into the extent they otherwise could have. So the entry probably is through products which facilitate and which then can be put into platforms which are run by larger companies or whatever nature. I think is what Young India can do, really innovate on. For example, I would think that in developing appropriate apps which work with all the things that we have discussed in the last 1 hour or so, Young India is the platform driver. It is not going to be old India. So if you could think of where does Young India want to do business, urban or rural, and can we design appropriate technology, appropriate products where these people have access, and then innovate around that, it becomes a very interesting option.
All right, so if somebody wants to start up in the financial services sector, what mindset, what new innovative idea does he need to get?
The first thing he has to get in the mindset is that in the financial services business, you don't make money tomorrow. So it will take you between 5 and 10 years to make money. You have to have patience. If you have that patience, you are in. But if you are going to get in saying that, oh, but I see the moment I have set up a bank, the bank valuation goes up and my license has value, you're going to be in challenge. So patience is the first virtue. Then you can start.
All right, patience is key. Any more questions? Oh, okay then.
Shruti, I think that's one last question.
Okay, that's the last question.
I don't know whether Ritu said that after seeing me ask the question. Anyway, Mr. Kamath, thank you very much for enlightening us on so many things in a very tight capsule. And the question that I had is that, since there are a lot of entrepreneurs around, in your wisdom, could you guide them as to, what business that they can start which is going to suffice for the next 10 years, not only to help in the process of nation building, but at the same time it is commercially viable and it is scalable to a global business, because we've seen a lot of businesses, from large business houses which have gone, abroad and taken the world over. But what is it that, we can start today, which can become the next Google, Apple?
Next Google from India, yeah.
Very tough question, then I should probably, if I can answer that question, I should be in some other business. But I will give you not the answer to this question, but see, today I think we are a land of opportunity, and almost anything that we do, if we do it right, we can take it to a scale which actually then results in what you said. And my career in ICICI Bank, over now 40 years or so, I've seen several entrepreneurs come in with ideas or were at a size which you never thought that they could scale up, but they had something in them, even during those difficult times, which you scaled up. And if I talk about one of my early clients, Reliance Industries, a turnover of 3 crores when I first dealt with them. So basically, nobody thought that they would be what they are today and could compete. Later on, if you were to see, Chris is here, Murthy, Chris and the team, they built up Infosys. Now, that they could actually build a business which today is a world leader in those trying times. Imagine, up to 1996, we did not have telephone connectivity with any certainty. In 2000, I gave you the example of the ATM. We had to have 3 levels of redundancy. At that time, to take this business and scale it up to what it has become, I think is true entrepreneurship. So there has been opportunity right through. You have had to, I think the key is for you to understand what are the opportunities, how to make it happen. How do you build teams, how do you execute, and how do you make it happen. By the same token, companies which have come under pressure over 40 years that I have seen, have clearly come under pressure because of hubris and because of the inability to change your mindset. So I would only leave this with you, that any business you run, you ought to have the ability to change your mindset. I will end with a simple thing, and I want to leave that as a thought. 97, again, C.K. Prahlad was running the program, and he brought in a different context to it. He brought in a behavioral person who asked 3 questions of the group of people. The first was, how volatile is your economy, India? And this is 97, so you can imagine. So people said on a 10-point scale, 9 being top, near top. How good are your people? Again, the person said, the group said, maybe 8 or 9 or whatever it is. 8 maybe. And then he said, but will your people change their mind and their mindset? I was just into ICICI Limited those days. Mr. Vagula was sitting next to me, and I was trying to change things. I was finding it very difficult. So with all humility, I said, I think I am at 3 in my ability to change people's mindsets. So it's not people's mindset, my ability to change people's mindsets. So Mr. Vagul sitting next to me said, no sir, no, we are at 6 or 7. I told Mr. Vagul, sir, that is the ICICI you are running. ICICI I am running 3. Now Chanda may today say it is 8 or 9. So that's your ability and the people's mindset, the way it has changed. I think India across, of course, the consensus number that day was 6. So the question was, if volatility is 9 or 10, your people's competence is 8 or 9, but your ability to change is 6, you are falling behind day by day. I will end this with another interesting link that Professor gave. He says, what do you think of a company which on the same 10 change mindset is 15? We said, how can it be 15 on a scale of 10? He says, imagine it is. So what do you think is happening? So we thought for 30 seconds that anarchy, which means the company is changing its mindset even before leadership is acknowledging it. He said, yes. This is 97, mind you. He says, what do you think is happening in Nokia? He says, Nokia, if the product development process is conventional, comes from the top somewhere and then goes to the lab and then goes to the market, test and come back, they're dead. So the way product development is taking place is feedback loops from the market are directly going to the R&D lab. R&D lab is producing things, putting them back, and at some point in the loop, the top management is kept in. This product is being developed, and so you're bringing product innovation to the marketplace. Today, who is doing that? Today, as I can see, is Apple is doing that. And today, on that same innovation loop, probably Nokia has gone way down from 10. I don't want to put a number to it, whereas Apple probably went beyond 10. So basically, every one of us here need to put that in context. Are we able to influence change of mindset in our organization? Because that's the key. The last point, the last sentence that I'll make is, I see a lot of young faces. And this at every convocation I have gone to, I've woven in, because I want to leave them with a whole lot of excitement. And I truly believe this, that honestly there was never a better time to have been born an Indian. So I think the young group at the back sitting there, I think are blessed in that context. And we need to also count our blessings, because if they are going to be blessed, we can also ride on that blessing for the next 25 years or so.
All right, before I let you go, Mr. Kamath, my final question to you. You've had a natural progression from finance to technology, from ICICI to Infosys today. Share with us your mantra for success, both in the finance and the technology space.
See, I am no technologist, so I must disown anything that you give me credit there. Yes, financial services, we have done, the organization that I led have done a few things. Basic mantra is very simple, and I consistently will push it. That is, keep your mind open to ideas from anywhere around you. See how you can leverage those ideas. Those ideas could be technology, those ideas could be way people work, whatever, way people behave, and leverage that into your business. And then, make sure that, there is a mantra that change is the only constant. Change is going to happen, and are you willing to embrace change? The last one is make sure that you are not overcome by hubris. The organization is not overcome by hubris. By embracing all these things and putting them into your context, and you will succeed. Of course, build teams. Teams make you succeed, not you.
All right, thank you, Mr. Kamath. That's a wrap on this session. Thank you, ladies and gentlemen, for joining us. Over to you, Raju.
Ladies and gentlemen, a huge round of applause for Mr. Kamath. An extremely insightful, extremely inspiring session.
Thank you.
Thank you, sir.
Leaving us very positive. I think you've convinced us that dream big, and you've made it sound so effortless to achieve those dreams. Thank you very much, sir. We're going to break for lunch now and reassemble at 1:45 for another energizing, stimulating session with Mr. Arun Maira. Mr. Sam Pitroda's session is further delayed because he is stuck at Chandigarh airport for the last 3 hours due to fog. So we'll have to do that session later. We'll reassemble for Mr. Maira's session at 1:45.
Thank you.
Thank
It's a
you.
pleasure talking to you.